value is countable money.
But not the face value.
Not the face value. So it could be $1 million policy, right, with a cash value of $200,000 or $100,000. So the cash, what Medicaid would count is the $200,000 is sitting there. And you'd have to get rid of that, like any other money. Or borrow it and spend it. So what do you do with this extra money above $14,000? Well, the first thought is, can you give it away to make yourself poor enough to go to Medicaid? And the answer is, yeah, in some cases you can. So if the man, the wheelbarrow, gives away all his money, anybody, you, me, throws it away, whatever, they are instantly eligible for home care Medicaid. There are no transfer penalties or limitations for giving money away if you're only receiving home care services. Right? So if you could promise me that your mom, your dad, your wife, your brother, sister, whoever, is never going to go to a nursing home, and some people try to promise me that, I'd say, fine, just give the money away to somebody and go on Medicaid. You're fine. But since you can't promise me that, someday in the future, the person may need to go from home care Medicaid over to nursing home Medicaid. And then you do run afoul of the transfer rules, which we'll cover on the next page. Okay? But just know that giving money away, the next month after you give the money away, you can go ahead and apply for home care Medicaid. Okay? But there's a problem for nursing home Medicaid is the one. The thing you've heard about a look back, the 5-year period, all these kind of things, only applies to nursing home. Because I have many children that go, well, we have, mom, we got 6 brothers and sisters, and between us, we're going to take care of mom. She'll never go to nursing home. I go, fine. If you can say that, then just move the money and use whatever you want. But if you change your mind in a couple of years and say, well, we can't do this anymore. Mom's got to go to nursing home. I go, well, you took all that money. What'd you do with it? You spent it. Well, got trouble now. Okay? So let's look, any questions? So now we're going to look at the transfer penalty rule. All right, next page. Oh, well, no, one more slide before that. There are certain, this is the slide. Certain gifts do not cause any transfer penalty, even for nursing home care. All right? So like here you have a house, you have your house you're living in, you can give the house, and I covered this briefly before, you can give your house to your spouse, no problem. You can give your spouse to the house and move right to a nursing home, no problem. You can give it to a blind or disabled child of any age. So if you have, a 50-year-old son who's disabled and has to get claimed Social Security disability, you can give them the house. Medicaid says fine. Give them the house and you can go right to a nursing home. We don't want the house. Give it to your son or your daughter, okay, or a disabled child. You can give your house to a sibling who has an equity interest, means a brother or sister who's been living in the house for at least 1 year and help pay the bills. Give them the house. Go right to a nursing home. You can give your house to a caregiver child who's been living in the house 2 years. So if your son or daughter has been living in the house, and you can have a 3-family house, just living in one of the houses, that's good enough. As long as you can prove they've been living in there for at least 2 years before the person goes into a nursing home, you can give that child the house. Medicaid says fine, with our blessing. Okay? The bottom row talks about giving cash money away. There's a different set of rules. So if you're trying to go on Medicaid and give your money to a spouse or a blind or disabled child, fine. You can or you can spend the money. You say, I'm just going to blow it. I'm going to go and just take a world cruise and just spend all my money. As long as you have receipts to show Medicaid. You have to have receipts. It has to be for you. So some people say, well, I've been paying my grandson's college for the past 3-4 years. Okay? That's a penalty transfer gift. Right? That's not for you. You were doing that for love and affection. You paying the bills. Right? Just like also people say, well, I've been giving money away to that. I've been giving my exempt tax gifts of $13,000, $14,000 per year per person. Those are penalty transfers for Medicaid. Those are allowed under the IRS code to avoid any kind of taxes, but it runs afoul of the Medicaid rules. All right? Because I have many people who say, well, for years I've been giving all this money away. My tax advisor said I should do it. I said, that's great tax planning. But now you're asking me about getting yourself on Medicaid. Those were all penalty gifts. Okay? That we have to get back. Hopefully the children didn't spend it. There are certain kinds of trusts you can shelter your money in. Not that many. So I really don't tell people to count on that. And then the final box is if the money was stolen. You invested all your money with Bernie Madoff, it vanished. Right? Because Medicaid can look over your bank records and see where all this money go. You need an explanation where it went. You can't just say, I played a lot of lotto, I gambled a lot at the racetrack, it's gone. They need proof. Right? So just know that these are the things that I'm looking for when I'm interviewing a client who's talking about going to Medicaid to find out, if there's any kind of loopholes or things we can try to do for you.
But you're still only talking about nursing home problems.
That's a nursing home problem only, right?
It's a wonderful.
If it's home care, who cares?
Differentiation.
Yeah, there's a big differentiation, and people go, "Look," you know how many times I argue with potential clients? They'll come up to me and they go, "Oh, I thought about going to Medicaid, but I can't get on." And they talk to me and they're like, "We gotta get you on." They go, "No, you can't. There's a big long wait, and there's a penalty for giving money away." And I said, if you just listen to me, and I'll talk to you about it. No, it's not possible. I said, well, fine, good luck. Go home. So, because it's hard to believe. Why do you have? I used to work for the poor. I used to work at the Brooklyn Center for Aging and Council of Poor People. And people say to me, well, how can this be? And I said, well, it's there, and there are reasons, but it's just stupid, but it's good. Okay, next slide. Now, this slide just deals with spouses. So if you're a husband and wife situation, this is the usual scenario. That usually you would move your money to your spouse. Usually before you give it to your children, you would normally give your money to your husband or wife before you went on Medicaid. That's the usual scenario. So transfers between a husband and a wife cause absolutely no transfer penalties for any kind of Medicaid. Okay? We do what's called spousal refusal because you are married. And if you're married, your spouse, the well spouse who's sitting on all the money, is legally responsible to cover your bills at the nursing home, for the home care, and so on. But we being a very liberal, generous, the biggest generous Medicaid state of all 50 states, we have a thing called spousal refusal. And in this state, if the spouse who has all the money just says to Medicaid, and we have this form letter, this, dear Medicaid, I have this money, but I need this to live on. So I'm refusing to pay my husband's or my wife's medical bills. Medicaid must accept that. Okay? And what happens is they will not look at how much money he or she has in the bank, and they'll just evaluate on the applicant, and the applicant, of course, only has $14,000 and is eligible. Right? However, I've said at the very bottom here, there's no free lunch. While they will give the the ill spouse who has no money, Medicaid, they will then investigate, of course, the refusing spouse to see if there are means to help kick in some money to help. Okay? So depending on how much money you have is how aggressive they'll be. And this is where sometimes discussion of divorce comes up, particularly in second marriages. Right? You have people who got married a second time, they go, well, spend her money, that's fine. You can spend all on nursing, I don't care. But then I have to tell them, well, they're going to come after you. They go, well, that's my money. I have a prenup. Right? It doesn't matter. Prenup does nothing. They're coming after you because you have more than, let's say, $100,000. You have less than $100,000, they won't touch you. If you're over $100,000, they're going to come after you. And I said the only way to prevent them from coming after you is divorce. And just
separation or just for divorce?
You need a legal separation or full legal divorce. Okay? You can't, if you really just, some people for religious reasons have separated and not done legal divorce. If you have proof you've been living apart, fully apart, for a number of years, and have different addresses and file income tax different, they probably won't come after the spouse. I've seen that many times now. Okay? But if you're still living under the same roof, but you say you're separated, no deal. Okay? But yeah, those people have a right. They can jump on an airplane, fly to the Dominican Republic, get a divorce. We show it to Medicaid. They go, fine, you're legally divorced. I keep saying Dominican Republic because that is considered a recognized legal divorce in New York State. You could do a New York divorce, but it takes like a year. Everyone's going to know about it. Yeah.
So in other words, you have to transfer the money to
first you move it to the spouse while you're spouse.
While you're spouse, and
right.
Then you get the divorce.
Right, no, because you can't do it afterwards. Because if you get divorced first, you're giving your money to a stranger.
Right.
Like I just had that case. I had a lady they were divorced, and then for many years, and then later in life, he moved back in with her and has been living with her because they're friends. And then he had to go to nursing home. And I said, if might be worthwhile to get remarried because he could dump all his money on you, and you get divorced again, right? But unfortunately, he passed away before you have to do anything. So, question?
You can divorce when you transfer the money, then divorce, and then they would say, well, you divorced after you got the.
Not if it's a legal divorce.
It's a legal divorce. So.
I say this, jokingly, but it's done. And the reason Medicaid does not come down on it and say, like the gentleman says, well, doesn't it look a little fishy that you move $500,000 to your wife and then suddenly you ran off and got divorced? Not a lot of people do it. Not because it's illegal to do it. It's because, usually we're talking about older couples. It's kind of traumatic to say get divorced, right? Even though I say just a piece of paper, you don't have to tell anybody about it. You can still go visit him at the nursing home. You can even be living under the same roof. You don't tell the children. You say, I'm going away for the weekend. You fly off, get divorced, you come back. Give me the papers. No one else knows about it, But no, so far, no problem.
So you can be divorced and live under the same.
Sure. Why not? We're talking about, you have to think legally. Medicaid has a right to go after the spouse because you're legally married and have a legal financial duty to pay their bills. Once you abrogate and break the legal responsibility, you can live with someone the rest of your life. Who cares who you live with? You don't have a legal binding duty to cover their bills. Yes, ma'am.
How long do you have to be married?
Oh.
I mean, let's say you're 80, now you get married, so you can give me money.
I just did that too. We had a couple. No, there's no time limits.
So a year later.
No. I just had a legal. I just had an elderly couple who have been like so-called boyfriend, girlfriend forever. They're both in their 80s, and she has very little income and money, and he has a bigger income. And I said, if you were to get married, she had her own apartment and everything. I just come over and look after him. I said, if you just get that marriage certificate, you're entitled to a lot of benefits. If he goes to a nursing home, you'll get to keep his income checked and all this. And finally, after some talking, they finally ran off to Connecticut and got married. They're still living their separate lives, but they have the certificate. And if push comes to shove, we get him on Medicaid, we will ultimately show it to Medicaid and say she's entitled to some benefits from him. So no, there's no time frame about when to get married, and how long you have to be married, or how long you have to be divorced, as long as it was legally done. Okay. So just know that a husband and wife can move the money back, but they are going to come after the well spouse, and and sometimes that's okay because it will be a savings in money to go on Medicaid, even if they're going to come after the well spouse. I'm not going to go into that much detail because when Medicaid does come after the spouse, they come after the spouse for the money they paid out to the nursing home or for home care. And what you'll find is that the Medicaid rate that they're paying out is a lot cheaper than private pay. It's almost half. So if you were going to a nursing home that's $18,000 a month, Medicaid's only paying like $9,000, $10,000 a month for that same bed. So when they come after the well spouse saying we want some money back, they're coming after you for $9,000 a month, not $10,000, not $18,000. Okay, next slide. Okay, so what is let's say you're not married and you don't have a spouse to give your money to. The only people you can give your money to would be friends or children. Okay? So therefore, Medicaid has rules about that. When you apply for nursing home care, right? Because we don't care about home care. Home care is fine. But when you apply for nursing home care, at the time you're in a nursing home and you put an application in, attached to your application, you have to show them 60 months of all your financial records. It's like an IRS audit. All right? So if you have 5 bank accounts, they want a 5-year printout of every one of those bank accounts. So don't throw anything away. I always tell children when they come to see me, make sure you don't start cleaning out mom's apartment and throwing away all the bank records, because we're going to need them. They have to get printouts. So they want to see 5 years of financial records on every account that you've owned during the past 5 years. They're looking over those records to see, did you give away money that could now have been used to pay for nursing home care? And if you did give away money, they're going to exact a waiting period, which we'll talk about on the next page in a second. So they look to see if you gave money away. If you didn't give any money away, you just have bills, you spent it on doing things, that's fine. But if you did give money away to somebody, it's not exempt, they're going to calculate a penalty rate. Next slide. This is the formula. Okay. It's a two-part formula, A and B. So A, first they look back 5 years over all the records. They can look at every month, every check. Okay. It's actually every check that's over $2,000. $2,000 or above they look at. Well, $2,000 or below they don't care. They're looking to see if you made those gifts. So over 5 years, they're going to pull out every withdrawal and check and make a note of it. They're going to tally them all up, and then you take that number and you go to part B. You take the total gifts and they plug it in that formula. And the formula is total dollars given away divided by the average cost of nursing home care in your area. And for New York City, it's $11,350. Another way of saying it is for every $11,000 you give away to your family or somebody, we're going to say you're not eligible for nursing home coverage for Medicaid for 1 month. Right? So let's say you gave $100,000 away last year to your son to help him with his mortgage payment or something. And now you need Medicaid and you have no money. Medicaid says, oh, last year you gave away $100,000. You divide that by $11,350. There's like 10, 11 months you're not eligible for nursing home coverage. Okay? So Medicaid does not come after anybody for money. People say, well, they're going to come after me. No. All they say is, you're in a nursing home, you come to us to pay the bill, we're not paying that bill because you gave money away last year or in the last 5 years. So what that does is it puts pressure on the family to give the money back. Right? That you gave your son $100,000, now he's going to get that money back to help pay the nursing home. Okay? So that's the formula that people have to worry about if you give money away. All right? If you didn't give any money away, it's fine. Or you gave money away to exempt people, or so on. So, now the question is, who thinks 5 years ahead? Right? Very few people. Most of the people come to me in crisis say, mom's now in the hospital. She's been into rehab at the Medicare rate now, and they say she's going to be ready for discharge or whatever, and she has $400,000 in the bank. So is there anything we can do to save any of that money and get her on Medicaid? And the answer is yes. There's always something, usually. The next slide. Okay. I'm just going to briefly touch on it, just so you know there's something out there. But people who come to me last minute and say, no planning, a nursing home now, there's money in the bank, or a house or whatever. What can be done? Yes, there is last minute planning that can be done. And basically, it's very complicated, but in the end result, if you implement the disaster plan, and then we used to call it the half a loaf of bread plan. Because if you think of the money that mom has at that time, it was a loaf of bread, and you just broke it in half. You'd give half to the nursing home private pay, and the family would walk away with the other half. Okay? But Medicaid tried to stop that. So they put all these laws and rules in to try to stop it. And of course, they didn't write the law correctly, and someone found a way around the law. So there is a plan that can be implemented that whatever you have on the day you enter the nursing home, and you just stay there now permanently, we can protect half of it. All right? Right? You can't get greedy. You can't say, well, can we protect all of it? No. Half of it's going to be spent, and the other half is going to go in the family's pocket. Hopefully to help supplement the person's lifestyle in the nursing home. Because there are things, you're in a nursing home, Medicaid's paying the bill, but you may say, I'm a working person, I want to have an aide go to the house, to the nursing home and feed my mom lunch every day, I want an extra aide to go. Wouldn't it be nice to have Medicaid paying the $18,000 bill, but you still have like $200,000 in the bank, that you could lavish extra attention and services and stuff on the person in the nursing home. Okay? So this is what you would sit down with an elbow attorney to explain and figure out and implement disaster planning. All right, so there's always hope, to protect something. But if you could do it 5 years before, you protect everything. Very rare for people to do that. So, okay, question.
What are the chances that all these laws, these loopholes will change?
It can always change. Can always change. I've been doing this for over 20 years now, Medicaid. It's hard to believe. And, when I started to go, well, of course they're going to stop up this crazy loophole where you could transfer your money and go on home care. Why should you be able to give away $1 million and go on home care, Medicaid, and have the state pay for it, right? It's 22 years ago I've been doing this, right? It's still here, right? They didn't like the half a loaf of bread thing. They passed all these rules that were supposed to stop it. And then someone looked and said, well, but you can do this. And you can do it, right? Now, maybe someday the legislature try to change that. So I can't tell you from day to day, but you know how the New York State legislature is. They have to make big changes. So anything can change. All I can do is tell you what the rule is now, and you hope it's there later. Okay? But no. Right? I mean, people could bet money on what could change on it. So,
if everybody's eligible for it, which it looks like they are pretty much.
well, there's a big stigma. There's still a big stigma going on Medicaid. Some people just don't want to go on Medicaid on an ethical reason. They go, well, that's for poor people. I don't want to go on Medicaid. But then I told them, I said, well, in your building, aren't there a lot of people who have these women aides who are looking at them? Oh, yeah, a lot of them. I go, well, they're all paid by Medicaid. They're not taking money out of their pocket and paying for that. So, even though it's available, there's still a big stigma attached to it. A lot of times children come to see me and they go, I have to convince mom or dad now because they don't want to go on Medicaid. They say they can't, or it's for poor people and we're not doing it. And then I said, well, they should learn the rules because someday when their husband or wife's in a nursing home and they're burning up $18,000, $20,000 a month, hopefully they'll remember what I told them. And they'll go, wow, I'm going to be dirt poor in a couple of years. Maybe I should do what Mr. Chu said and we could start doing something, right? So I don't push anybody because it's their money. I tell the children. Sometimes the children go, "That's wonderful, Mom. You should give me all your money now. So for 5 years you can get on Medicaid." Right? And then of course the parent goes white. They want to get out of there. And I say, I'm just telling you the rules. And if mom or dad want to flush the money down the toilet, throw out the window, it's their business. But as long as they should know this is available, and when they decide it's time or they want to do it, they'll do it. Or if they've lost their ability to make decisions, right, and you're the power of attorney to the child, then hopefully you'll do it for them, right? But until they're ready, it's very hard to pry the money loose, But sometimes we compromise. I say, let's give we talk about giving money away 5 years in advance. I tell people, sometimes people come in and they go, well, I have $1 million, 1.5 million. But I say, and the person's like 80 something, and I go, do you need 1.5 sitting in the bank? Maybe you give half to your children. Right? So you give $750,000 to your kid. You're still $750,000. If you gave that $750,000 5 years before you need nursing home care, right? Then that money's protected. Okay, you burn up that other $750,000, right? So I try to work out a compromise, saying that Mom, what do you really need to feel comfortable in the bank? Do you need $1.5 million? Would you be happy with $100,000 in your checking account? You're not even spending a penny of it now, right? And sometimes we work that out. A lot of times, being a good elder law attorney is being a social worker, being a diplomat. I'm sitting in between the bickering part. I have to try to work it out. But overall, I'm on the side of the senior. Like I said, I side with the senior, and they don't want to give them money. I say, fine. You're not pushing mom. I'm not trying to push mom. They go, well, tell mom. I go, I'm not telling mom. That's her money. And if she wants to hold on to it, that's her business. But she should just hear me out and know the rules. Okay? And I think, is that the last slide? The slide. No, that's it. So once you get on Medicaid, you're on only for a year, then you must recertify every year, which is just a small, they want to check your bank, especially if you didn't hit lotto or you didn't inherit money from a rich relative or something, so it's pretty easy to just recertify every year. Okay? So in summary, there are many options out there to cover long-term care. You've learned that Medicare does not cover it. Long-term care insurance is okay if you buy it, but you can buy it, if you haven't bought it by now, I'm sure no one's ever going to buy it now. And then, Medicaid is probably the biggest one available to you, and you really should look into that. Okay? So I think that's the end of the actual presentation. If there's any questions, we'll do questions and answers, and then you can have coffee.
Yes, let's entertain questions.
Let's start from the front and go backwards.
I did not quite understand what you said about legal separation.
Oh, well, there's
In
two.
the case of
Yeah.
a couple living in a co-op, legally separated, but still living in the apartment because they can't afford to go anywhere.
Right.
So how is that considered?
Well, you're not married anymore. In Medicaid's eyes, they're looking at who is legally responsible to cover bills, right? So one thing we learned is that children are not legally responsible for their parents, okay? So children, even if the parents are living with the children, Medicaid does not sue or come after the children. They can only come after a married spouse, right? So that's our main concern. So the only way to prevent Medicaid from have the ability to go after a married spouse, right, is to either get a full divorce, right? But if you, let's say for religious grounds, you say, I'm not allowed to divorce. No, we don't recognize divorce. Well, you can go to court and get what's called legal separation. And that's a piece of paper that says, we're still, in the eyes of God, married and everything, but we're legally separated, so we shouldn't have responsibility to pay each other's bills. So it's just short of a divorce, if we're looking at it that way.
But still in the same home.
Well, you can live in the same home once you get divorced. It's like saying we would never, like two non-married people can live together, right? We do not have in this state, what do they call it? Common law, right? Common law marriage, right? Two people living together forever, no matter what they say, are not married unless they go get legally married in this state. So same thing. If you were married and got divorced, you could live together. It doesn't marry. That does not make you get married. It's just living together. So.
Yeah.
Okay, so you just, yeah.
I'm not sure how to ask the question because I'm very inexperienced in all this. Turning to long-term care. If one has a long-term care policy, there are evidently advantages to having long-term care policy. Husband and wife, for example, cover essential needs. But the way you're suggesting here, we can meet these needs without the long-term care insurance policy.
Yeah. Okay. The question is, well, if looking at the options and you presented the Medicaid option, and Medicaid would work for you, why would you even maybe consider a long-term care policy?
And let me turn it around and say, when would one buy a long-term care policy?
Well, the earlier, the better.
No, but I mean, why would one even need it then?
Well, now you get into why does anyone need disability insurance? Why does anyone need life insurance? It's an insurance issue, which means I've seen this argument with families a lot. They go, well, my mother went through this, and my mother went on Medicaid, and I never want to be in that position. So I bought I can afford it, I have a good job, I bought a big long-term care policy, and it's going to pay, whatever, so I never have to go through that, okay? That's a personal experience of fear, okay? But someone who hasn't been through that fear, you go, well, should I? Maybe I should just use Medicaid as my instantaneous long-term care insurance policy. Well, as this lady here said, maybe they'll change the rules next month. They could change it next year. Medicaid could vanish. I mean, I can't tell you. So it's a risk thing. It's how risk averse you are. Follow up.
And I just follow this up again, trying to understand better. If one takes out long-term care insurance, is one better off physically? Are you living better than if you live on your other solutions?
Okay, the question is if
I don't
you...
understand why people get it then after all these years.
It's a personal... Okay, well, no, I wouldn't say you're any better. You're maybe less stressed. You don't have to go through an application process for Medicaid, but you can be just as stressed trying to claim your benefits under the long-term care policy. You know how many people want to blow their brains out trying to apply, saying we haven't met the 3 ADLs requirement. We have to have impairment of 3 activities of daily living before my wife can get the home care. And we keep getting these letters from the doctors, and the long-term care policy says, no, that's not good enough, or you have to show more this, that, and they go back and forth. And then, they send you a check. It's like going for reimbursement, right? You have a policy, you say, okay, it's like a flood insurance policy. We got flooded out, but now we put a claim into our flood insurance. They go, oh, we need to send an assessor out there. And, you argue about what the value of that door was and how much that furniture was worth. And it's just, insurance is insurance, okay? And I'm not saying anything bad about insurance, but insurance is insurance. So therefore, the question is, are you any worse off because you didn't buy a long-term care policy and went on Medicaid, or are you better off because you have long-term care and then went on Medicaid? No difference. really no difference. But you may have the attitude that, people on Medicaid, I would never want to be one of those people. So you're going to buy long-term care insurance then, right? So there's no, I know you're trying to, there's no one sentence I can say to summarize why one versus another. Everyone buys long-term care policies for their own personal decisions and fears. And you know how insurance brokers are. They tell you all this stuff, and they're going to talk you into it. There's many articles when I was preparing for this talk and other talks. You can look them up on Fortune magazine. And there's opposing views to buy long-term care, not to buy long-term care. Use Medicaid, not use Medicaid. And both sides are very cogent arguments, and it depends what appeals to you. If you sat down with a broker, insurance broker tomorrow in a private room, I'm sure he convinced you to buy long-term care. He'd get you so frightened that you buy long-term care policy. And the question is, how much are you going to buy? Because how much will you get out of your pocket?
But I just have one thing to
Yeah.
respond to this question. Wouldn't it prolong the process of applying for Medicaid?
No.
If you have the long-term
No. Okay, well that's a good question. Suppose you have a long-term care policy and you say, oh my God, it covers $100 a day. My wife's going to the nursing home.
No, I mean a good policy.
Well, okay. Well, a good policy, yes, it would. If you had a good policy that was going to cover $300 a day, it actually would forestall you from going on Medicaid, because hopefully those hundreds of dollars you were getting per month or per day would be enough to keep you healthier and not need to go on Medicaid and so on. But who are we helping with that? You're saving Medicaid money.
Sure.
You're being independent. You don't have to go on Medicaid. But you did pay a lot of premiums for that many years. And the question is, are you ever going to collect that? Because, as I tell people too, you could pay premiums on a long-term care policy for 20 years and then drop dead. You never used it. I mean, I'm just saying, that's insurance.
That's what they're counting on.
Well, and look, I can tell you the formula is a person who enters a nursing home is expected to live about 2 years. What is the average payout for a nursing home long-term care policy? About 2 years. Because they know. But let's say you live beyond that. Right? Most policies say, okay, I bought a policy that's going to cover $300,000. That's the maximum that's going to have. You go to a nursing home, right? I just told you how much it costs per day, $500 a day. Right? So your policy is exhausted in like 2 years. So now you want Medicaid anyway. So all it did was it stopped you from going on Medicaid for 2 years. You had a policy, but as I told, many people have this fear that you end up in, as I said at the beginning, a Medicaid nursing home.
Yeah.
You're not. People said, pick any nursing home in Manhattan. They all accept Medicaid. Okay, so that's not a fear. Okay, so there's arguments on both sides, but I can tell you, many people have long-term care.
It seems easier if you're a couple. Then the transfer of the money is an easier thing. If you're single.
Well, okay, that is one reason. Okay, one thing people do is you buy the policy to cover the transfer penalty period. So if you bought a policy that was going to cover 3 or 4 years of nursing home, and let's say you have a lot of money in the bank, then when the policy kicked in, at that moment you gave all your money to your kids, right? So you gave your money to your kids, caused a 5-year penalty. But you have a long-term care policy that cover 4 years.